Hello there. Welcome to Commodities. Let's see how the energy complex is doing right now. We saw a drop in oil today. Look at that, sliding 5% after U.S. President Donald Trump sent signals that he may hold off on an attack on Iran right now. He says the country has pledged not to execute protesters. We saw that slump in West Texas because, of course, if he doesn't launch some kind of attack on Iran, that reduces the risk of disruption of Iranian production and shipments. However, oil had been up 10% over the previous week. Not much joy, though, when you look at the 5-year chart. Trump telling reporters that he has been told that, quote, killing in Iran is stopping. But he said he'd be very upset if the regime's crackdown goes on. So the oil market cooling down at this stage. We'll have lots more on the show about that. Let's have a look now at the metals, and gold giving up some of its gains, still trading near record highs. It's been hitting all-time highs this week. We did get U.S. weekly jobless claims that they declined less than expected. So that pointed to strength in the U.S. job market. Lingering strength, and that, of course, could deter the U.S. Federal Reserve from cutting interest rates. Signs of strength in U.S. labor. That helped to push up the U.S. dollar, because usually when an interest rate cut is delayed, it helps the currency. And also that more moderate tone on Iran reduced demand for a safe haven. We're watching companies like Newmont Mining that have operations in Ghana. You can see Newmont stock up sharply today. According to National Bank, though, Ghana in West Africa, a major producer of gold, a long time stable jurisdiction, is proposing scrapping mining stability agreements. Those are agreements on taxes, etc., with mining companies, and doubling royalties. Now, it's just a proposal at this stage, but it could have implications for countries or companies with operations in Ghana. And apparently the Ghana government just eyeing this surge in bullion and wondering, well, is our population getting a sufficient cut of this windfall? Let's get to some other commodity-related stories we're bringing you. Shares in Alamos Gold under pressure, down about 5%. Gold production in the latest quarter missed expectations. Alamos is pointing to severe winter weather and seismic events. BHP and Rio Tinto are apparently set to join forces to produce up to 200 million tons of iron ore over the next decade. Going to collaborate in 2 projects in Australia's Pilbara hub. And of course, they operate in massive scale there. They're going to team up on infrastructure. And finally, cocoa hit a 2-year low after European cocoa processing posted a steeper than expected slump. The amount of beans ground into butter in Europe fell 8% in the fourth quarter, the lowest going back to 2013. Well, let's get to the Prime Minister's visit to China. They've unveiled a series of cooperation agreements. And of course, politicians love to do this. They don't really mean very much. They're a statement of intent. China says it will boost agricultural trade with Canada after slapping a massive tariff on Canadian canola. Let's find out what this could mean for Canadian sales to China. We're joined by Fen Osler-Hampson, Chancellor's Professor and Professor of International Affairs at Carleton University. Thanks very much indeed for joining us.
Good to be with you, Andy.
So no actual deal on canola. I don't think anybody was expecting one this week.
Absolutely. But the visit has been important because it's produced a package of sectoral agreements in energy, food safety, agri-food access, tourism, cultural exchanges. As you said, no deal yet on canola and EVs, but importantly, a commitment there to continue negotiating. And I think it's fair to say that with this visit, the page is now being turned for a new era in Canada-China relations.
That's interesting. Obviously there were sticking points, the detention of the CFO of Huawei, etc. There doesn't seem to be much talk, though. I haven't seen anything, and we've heard that this is going to be strictly business between these talks between Mr. Carney and the regime. Nothing about Chinese meddling, for example, in Canadian affairs.
Right. They're staying away from, what we would call the hard security and human rights issues. I suspect privately the prime minister has raised these issues, but he's not doing it publicly. There's no tub thumping on those issues, and in part because I think there's a desire on both sides to move this relationship to much more of a business relationship. Clearly, China is going to be an important part of Prime Minister Carney's diversification of Canada's trade and investment relations away from the United States.
I've been doing a crude attempt to work out what's more important to this country, the auto industry or canola. And of course, there's different ways of measuring economic impact. But last year, our canola exports to all markets were something like 15 billion, whereas our auto exports were north of 40 billion, maybe 45 billion. So by that metric, autos are far more important than canola.
Well, there's also the politics here. Canola is very important for the western provinces, particularly Manitoba, Saskatchewan. Autos are obviously important to Ontario. I think there is a basis for a deal here. Let's face it, if there's a will, there's a way. And what we're likely to see is some kind of what might be called phased tariff rate quota agreement on both canola and EVs, both sides agreeing to lower tariffs, not to flood the market. They'll have quotas for both. And I think, as we look at the future of the auto sector in Ontario, Canada is going to be pressing the Chinese that, if we're going to buy Chinese-made EVs, to assemble those here in Canada as part of a tariff relief package in order to provide jobs for those workers who are being laid off by the American-owned vehicle assembly plants in Ontario, which is happening right now and is likely to continue to happen.
It's an interesting situation, isn't it? Do we have to dance to the American tune there? If they decide not to let in Chinese electric vehicles, will it be a real problem for Canada to do it?
Well, I think, Canada's under no illusion that, we're going to be selling Chinese EVs to the United States. But there's a very big market here in Canada for electric vehicles. I mean, there's also the infrastructure, I'm afraid, that has to be built so that you have a place to charge your EVs. But I think for the Chinese, they have a surplus right now of EVs. They want to sell them to other markets. And, Canada is a market of some 41 million consumers. It's non-trivial. So they're looking to get access to the Canadian market.
Yeah, it's interesting. I mean, we have heard Western politicians saying, because Saskatchewan and Alberta, the core of canola production, nearly all of it, saying that the current tariff policy, well, it's hurting us at the expense, but central Canada's auto industry gets protection. Right.
Well, I think the premiers have to start talking to each other, stop playing local politics. It's interesting that Doug Ford has turned the dial a bit on Chinese EVs. What he said is, well, if they assemble them here in Ontario, yes, we'll take them. And I think that's a positive sign. Let's not forget, too, that Chinese EVs are going to be a lot cheaper than any kind of other electric vehicle that you buy. And Canadian consumers, at the end of the day, are going to be the beneficiaries of that.
Yeah, because we've heard some commentators say if we're going to get anywhere near our emission goals in cars, we need Chinese EVs because the North American manufacturers don't seem that interested.
Well, and they're also very expensive, but at the same token, or by the same token, we have to make sure that the Chinese are not going to be dumping EVs into the Canadian market and, undercutting production from other manufacturers. But as I said, I think there's a basis for a deal here. It won't be all at once in terms of eliminating tariffs, but you bring them down slowly so that there can be an adjustment.
Fen, thank you very much indeed. That's Fen Osler-Hampson, a Chancellor's Professor at Carleton University. After a break, we're taking a look at the lumber sector. Our guest says, yep, 2025 was rough, but it may have been as bad as it gets in the current cycle. And there's reason for optimism. We'll be right back. Our guest says in 2025, the forest products industry was left for dead. Trump increased tariffs on Canadian exports. It was pretty moribund recovery for U.S. housing. However, he says 2026 could be the reset year. We're joined by Darryl Swetlashov, Senior Managing Director and Head of Equity Research at Raymond James. Darryl, great to see you, and thanks for joining us.
You bet, Andy.
You're essentially calling the bottom in forest products here. You say that, sure, challenges persist in U.S. housing, but the stocks, you say, are unequivocally cheap. And politically, there are signs that President Trump might seek to rejuvenate the housing market in the U.S. as we near those midterm elections.
Well, exactly, Andy. If you look at this sector, we're suffering 15 quarters in a row of a downturn. The stocks have been cheap. They've gotten cheaper. Cheap isn't good enough for us, though. Really, what we saw is three catalysts, which led us to upgrade the names right now. Technicals, supply, and demand factors, as you point out as well.
One problem for the Canadian industry has been massive expansion in output in the U.S. South, those pine plantations in places like Georgia. But you think we're not in for more meaningful growth in that part of the world right now?
So supply is one of the key factors here, Andy. In Canada, you mentioned the tariffs. The cost structure has gone up a lot. We've seen over the last 2 years about 3.5 billion board feet come out of Canada. That's it's about 7% of the North American market not flowing south right now to the U.S. We think that's a big factor in balancing the market. On the other side, the factor that you mentioned, there has been an expansion in the U.S. South. However, with the increase in costs, you've seen the steel implications on some of the tariffs as well, and reduced profitability, and also pulp mills shutting in the South. We don't see the U.S. as being able to meet their own lumber demand, even with all the wood they have down in the South.
You did a couple of rating changes. You moved West Fraser Timber, the industry giant, up to outperform, buy from a hold. What was your thinking there on WFG?
So when we look at the stocks, we were marketing in Toronto this week. We had our U.S. housing analyst, a very good analyst named Buck Horn, and we had Toll Brothers. So we got some insight into the demand side of the equation in the U.S. What we see happening, Raymond James' view is that single-family housing starts are going to be a little bit stubborn to come back, but repair and renovation from existing home sales could be the place to be. That would tend to favor lumber over structural panels like OSB. So our top picks right now are Canfor and Interfor, raised both to strong buy. West Fraser is the bellwether. It's the most largest liquid name. They do have a meaningful lumber exposure, but they also make some OSB. So they'd be one peg lower than Canfor and Interfor.
And then, you may have referred to this, Canfor and Interfor, you're even keener. You've gone to a strong buy from a buy.
Yeah, again, we see in terms of demand, first we saw the supply coming out, so we have less lumber available, and some of the optionality in demand. We are heading into the midterms in November. There's a sense that the U.S. administration would like to get housing going. Mm-hmm. You've seen some of the work done on buying MBS securities. There's $200 billion allocated towards that. Mm-hmm. Could we see more, I guess you'd call it QE in housing? Could that get the long end of the rate curve down and stimulate housing? That could very well happen. So, we do see some potential for increased housing activity as we move into the second half of 2026.
Just remind me, the US, of course, they have that odd housing market where people take out mortgages for decades, and it can make it sticky then. It's unattractive to sell your house because you'd have to pay much more if you got a new mortgage. Have they made any progress on that?
Well, that's an excellent point, Andy. And I think that's why the existing home sale numbers have been, right back to great financial crisis levels. Lumber, about 40% of lumber demand is repair and reno. There has been a backlog of necessary repairs. And as that used housing market frees up, we think there's going to be a lot more repair and reno. And that's one of the reasons we're more bullish on lumber than structural panels going forward.
Tell us about BC, though, just finally, before we let you go, Darryl. A lot of damage done over the past few years, a lot of mills shut down. Are they coming back?
Andy, if you look at the mountain pine beetle effects that we saw, that was unavoidable, and we had a large curtailments in British Columbia. Since then, we've had increased costs, lack of fiber availability, a lot of this self-inflicted through provincial and federal government policy. But costs are still way out of line. So we're going to have to see some progress on getting some of that fiber available and reducing cash costs before we see BC mills really investment come back to that province.
Darryl, thank you very much indeed. I think you're visiting from BC right now, and you've been given some pretty formidable central Canada weather. Thank you very much indeed for joining us. Darryl Sweatlish, Senior Managing Director, Head of Equity Research at Raymond James. Coming up, the price of oil slipping below $60 again. We'll get an outlook for crude after the break. Let's get more on the oil market. Crude dropping today on what is seen as reduced prospects for a U.S. attack on Iran, for now anyway. We're joined by Vikash Dwivedi, Global Energy Strategist at Macquarie Group. Vikash, great to see you, and thanks very much indeed.
Yeah, thanks for having me.
There's always multiple currents, I know, and cross currents in the oil market. What's catching your attention most right now, though, in global oil?
The big items catching our attention are obviously the geopolitical events. Venezuela last week and the week before, and then obviously Iran is front and center this week. And we think these are the big items.
Right. Venezuela, I know we've heard ad nauseum. It's going to take years to significantly increase oil from that part of the world.
Actually, we don't think so. We think it'll be faster.
Oh.
We think you're going to see some early success, and then you'll hit another wall. So we think, people are underestimating how quickly the first tranche can go up. Now, can it go from the recent 800,000 to 1 million all the way up to 2.5 million quickly? Absolutely not. Can it get another 200,000 or 300,000 relatively in a timely way? We think yes. So, and then maybe another, like 500,000 total from recent levels, also in a timely way. The answer is more likely than I think the market is giving credit for. But once again, in order to get back to where they were at, say, 2.5 million and certainly 3+ million, it's going to take years. So we agree with that part of it.
And certainly there has been an effect on the prices for leasing tankers in the U.S. Gulf. That price has gone up, apparently partly because people see more oil coming out of Venezuela.
Absolutely, yeah. Look, if you look at the way, and look, I'm not an equities analyst, but you don't have to be one to see how the companies involved have performed. Certainly their investors are expecting quite a bit more availability of Venezuelan crude. For direct usage and for what it will do to the light-heavy differentials, right? They've been compressed now for a couple of years, and that hurts the refining profitability of complex refinery systems. But this should help. This should help. They'll be able to run the crudes they were designed to run with a little bit more leverage, and they'll probably get those crudes at a lower price.
you're not an equity guy, as you say, but would this be good for on the surface for a company like Valero, stock symbol VLO?
Yeah, once again, I won't comment on the equity valuation of Valero, but I can say that with the refining margins in the Gulf Coast, should get a boost, right? And if that plays through into equities, then, it would be sensible. But, we'll stick to the commodity picture.
Right.
And I think they'll have a good margin backdrop as a result of this.
Could we talk about this widening discount on WTI to Brent? What is happening there?
Yeah, a couple of things. The marketplace for WTI is just rapidly still growing in production. Once again, against the odds of what the market is always skeptical of U.S. growth. We don't know why at this point. We think it's kind of crazy to be skeptical of U.S. growth until it stops and goes the other way, and it hasn't. So that's one piece of it. But also the rising tanker rates around the world, as you noted earlier, will also make that spread get a little bit wider. So we think those are the big factors there.
We've only about a minute left. Just every so often we hear, Iran might try to close the Straits of Hormuz. One analyst saying that the regime in Tehran would only do that in desperation if they felt they were into an end game.
Yeah, we agree with that. We think it would be an end game, kind of option of last resort. But it would also, we think, if you do it, you've almost sealed the end game, meaning you will be run out, right? So it's unlikely. We
better go, because thank you very much.
Okay.
Could talk to you all day. I always love getting your analysis. Thank you very much.
Absolutely. Thanks for having me on.
Vic Castruati is a global energy strategist at Macquarie Group. Thank you very much indeed for watching Commodities. Let's have another quick look at the price of gold if we have time, because it's been such a dramatic story this year again. I was looking at Agnico Eagle's stock this morning. It was up something like 18% so far this year. So gold slipping. We did this morning see the spot price of gold down, but look at that. I mean, the amount of money that these gold companies are making, especially those with all-in costs close to $1,000 US. Well, they're just piling it up. Talk about King Midas. Thanks very much for watching. We've got the close coming your way.